Very good morning to everybody. Today is
Good
the second
morning,
day
sir.
of this program. So let us continue. The first module, Principles of Credit Management, Lending Policies and Best Practices. That's what we are discussing. Guidelines for good lending. Today we are going to discuss good lending or quality lending. Quality lending. Make a note of this. Good lending means quality lending. We are going to discuss it. Actually, in the past, when lending is considered, it was mainly the traditional security-based lending. When a customer comes and asks for a facility, the manager or the credit officer first question, what is the security you have to offer for this credit facility? That is the, so we call it traditional security-based lending. But actually it should be a skill-oriented cash flow-based lending. What does it mean? So you have to analyze the customer's request and see whether after granting the facility, whether the customer will have sufficient cash flow or whether the cash will be generated for him to repay this loan. So we call it cash flow based lending. And for you to analyze this cash flow based lending, you should be skilled. You must develop your skill for this analytical work analysis. So that's what we call it is not the traditional security based lending, but it should be skill oriented cash flow based lending. But security is also important.
Sorry for the inconvenience. There's a small technical mishap I went on. Okay. Diploma in Credit Management, the last year's one, no?
Good morning, sir.
Good morning. Okay, there are two groups are going on in the same course, new batch and the old former batch. We are coming to the last session, no? Last module. Okay. Hello? 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 Can you hear me?
Yes, sir.
Hello? Yeah. Now, yeah, last week we had discussed the project report. Is it the same class as this? Can you answer my
Yes,
question? Yeah.
Yes,
Okay.
sir.
Then we'll continue because there's some problem, some misunderstanding about the IBSL. So they have sent the wrong link for me. I already started class in the wrong class. Anyway, now we'll start. We'll continue. This is the last module of our Diploma in Credit Management program. It's called Recovery Management. Recovery management, when you talk about recovery, it comes to our mind that default facilities. And when it comes to recovery management, most of the lenders have two options. First option is going to customers and writing letters and reminding the customer to pay or no before such and such amount. The second option is going and threatening their filing action and will take the legal action. Okay, these two are very not ethical on the banking side. Also, sometimes legally also we may not be able to process this matter. Therefore, recovery management is a process. It's a process. That's a it's becoming more professional. So let's see what is this process. Starting with how it is to start and going on. What are the options available for recovery? How to identify the customer's problem, and this is what we are going to discuss in these 3 sessions. Okay, right. When we talk about recovery lending, we are doing a business. Our business is financial intermediation. of business is financial intermediation. That is, we collect the deposits and lend to the needy people, and we earn a profit. Therefore, we need deposits. So when we collect deposits, we are very happy because we have enough sufficient funds, sufficient resources to lend. When we lend, when the customer pays back with the profits, interest or the profit, we earn our profits. We earn our business success. But when it comes to non-performing advance, that lending becoming defaulted, it's called NPA, non-performing assets or non-performing advance. It will create banks perishable. Banks perishable. Why is that? Let's see. Banks survival is threatened. Continuation is threatened. Profitability is threatened. Okay, sorry. The eminent bankers defined loan as loss of assets due to non-payment. Loss of assets due to non-payment. Whose asset is this? Whose assets are these? Whose assets? It is bank assets. Our lending appears in our balance sheet as receivables in current assets. It's current assets. So when it is in the current assets, we know that any business, current assets are part of working capital. So working capital cycle. It should convert into recovery. Then only we earn profits. So these assets are creating profits for a bank, any lending institution. When it goes in non-payment, we have a number of impact in our financials. Let us say first, what will happen to our profit and loss account? When our recovery is, whatever recovery is going bad or customer not paying, payment are due or defaulted, first problem is we are not, the cash flow. The cash flow is getting deteriorated. That is liquidity. We have a facing a liquidity problem. Our cash flow is getting deteriorated. We anticipate customer repay, that will our cash inflow. Now, cash flow inflow is getting deteriorated. Secondly, our profit are getting deteriorated because our income is not coming in. Our income is deteriorated, therefore our profits are declining. Profits are declining. Third impact, P&L. Whenever NPS transferred NPA, according to the guidelines, we had to make a provision for that. We had to make a provisioning. When we make a provisioning, it will debited to the profit and loss account. So, if it transfer to debited the P&L account, what will happen? Twice. The same defaulted facility will be debited twice into the P&L. Debited twice into the profit and loss account. So our P&L get deteriorated. When our P&L get deteriorated, we may not able to service our dividends, and our dividends are not service to satisfaction of the shareholders. That is in the story. Bank will perish, bank will close. This is one of the serious issues we are having in lending. Therefore, lending is risk because of that. Right? So that is impact on the P&L. What is the impact on the balance sheet? What is the impact on the balance sheet? When our assets are there, when the assets are non-performing, it will not generate any income on side. And it's becoming a hardcore, we call as a unproductive assets. When our assets are not generating income, we call this as an unproductive asset. When the unproductive assets are there in the balance sheet, what will happen? So any business organization, specifically banks, the performance evaluation criteria, one of the indicators ROA, return on assets. Even we work out for customers. What are the return on assets? Every rupee of assets invested and how much of profit can be generated. Every rupee of asset, how much of profit generated. That's what the investors looked in our, whenever they are going to invest our business. Now, lending institutions. Whenever we issue shares, whenever we issue debentures, even sometimes large customers who have come to deposit, long-term deposits, they look for this, our stability. This is one of the indicators indicating our stability. So NPA, what will happen when the ratios are deteriorating, coming down, we may not be able to find investors in this. It has happened 3 years back, one of the banks. 3 years back, not so long before. 3 years back, one of the commercial banks issued certain, put to the market shares. It's a right issue. Right issue means existing shareholders to buy shares. What happened? There's no subscribers. Even the existing shareholders did not come forward to purchase the shares. New share issue. And what has happened? Bank has to withdraw from the security exchange share issue. Even the underwriters didn't withdraw from the underwriting the shares. In such instance, what will happen? Now, this is very important. Next, little later, I'll tell why the share issues came and what is paid. We'll discuss that. That's important. We have to understand what's happening in our industry. Okay, so this loss or non-payment had a big impact on our survival and our profitability to maintain assets.
Excuse
When
me, sir.
assets are profit deteriorating, unable to service our dividends.
Excuse me, sir.
Sorry?
Excuse me,
Last
sir. Is this the first session on recovery?
year, the session be,
There are 3 sessions on recovery, no, sir?
this is the first one. Yeah.
Yeah, we had a session last week also.
Last week we had that project report, no?
No, on recovery.
Recovery? Did we
Yeah.
discuss slides?
Yeah. Yes, sir.
Sure?
Yeah.
Oh, I see. I'm sorry.
Yes, sir. We discussed these slides.
These slides we discussed last week.
Yes, sir. And IFRS and all.
Sorry, didn't it up. I thought last week we discussed this. Okay. Then I'll go to the other sessions. But only thing is that we have to upload the. But let's see whether can we do it now. Sorry, whether. මේ පරි ප්‍රොබ්ලම් එකක් කියලා තියෙනවා මේ මම ඉවල තියෙන වෙබ්සයිට් මේ Wait, give me 5 minutes. I'll upload the next session, next slides. Okay, 1 minute. Time. I have missed up. Sorry for the inconvenience. Even the Menak has not, when I send the presentation, normally he goes to tell me. Okay, sorry. So let's continue with this monitoring supervision follow-up. So once we identify why the importance of recovery, right? Let's start with the monitoring. What is monitoring? What do you mean by monitoring? Any of the action of various persons or devices for checking or warning about the situation is called monitoring. It's a device or action or behavior applied to see any situation. Can be a normal, worse situation or a good situation, positive or negative. When you monitor, you get the results as positive or negative. So monitor will be starting before granting the facility. At the time of appraisal, in the poor credit appraisal, we start monitoring. This monitoring, when you discuss and negotiate with the customer, we interview the customer, sometimes we may come across certain gray areas. We may come across certain shortfalls. So some areas where has to be corrected or rectified by the customer. Because of that, we apply certain conditions to monitor later. To look at after granting the facility, the customer has been rectified those things. Or before releasing the facility, whether the customer has been rectified that. So monitoring such devices to check. Some of these devices are the periodical statements, quarterly financials, stock reports, operations reports, debtors and list of debtors like this. Whatever important for a banker, we call for information. That's one of the some of these devices. Then also we pay visits, right? Inspections, visits, that are also part of monitoring. Right after granting the facility, we periodically visit the customer, site visits, do inspections. Mostly, sometimes we'll go and ask the customers come and we discuss that question. All these things are devices for about checking of a warning about a situation. Supervision means after granting a facility, see whether customer is adhering to the terms and conditions that are given, apply with at the time of granting the facility, terms and conditions, whether he is following and whether he is going in the same track. Whether he is going on the same track where we have granted the facility. For example, if you ask him to maintain certain levels of operation, see whether the customer is maintaining that operation level. If you go beyond or below, it will have a certain effects in our continuous loan facility. For example, if you have exceeded because the demand is high, he exceeded the capacity. It will be a danger because the machine wastage is going up and that will deteriorate the profits. So monitoring is, the supervision is looking at what is being by the customer, sitting behind and looking, watching. Silence work. Follow-up means activity begins immediately after sanction of finances. Follow-up means whether we have granted this facility according to the bank's regulations, according to the legal requirements, and whether customer has been executed the documents and we have executed the document according to the legal requirements and our practices. Now, normally, this before the securities documents are lodged, we do this type of follow-up, and that will be basically it calls normally credit audit or post sanction audit like that. Okay, so these are the three similar the meanings are almost similar, but almost three different areas. Let's start with the supervision. What is supervision? Typically, supervision refers to the activity carried out by supervisors to oversee the productivity and progress of employees who are reported directly to them. This is the definition given in the books, right? So, what we do as supervisor in the bank is same thing, right? Like how supervisors supervise the operation, conducting the progress of the employees, same thing will be applied for our borrowers. We will do it conducting the process according to the requirement. Supervision is a management activity and supervisors are management role in the organization. So we are on some of this supervision part we are doing. Appraisal and supervision are two sides of a coin. Appraisal and supervision are two sides of a coin. Advances are granted on the basis of sound appraisal, which goes bad because the borrower did not carry out his promise regarding the performance, and bank did not realize this fact through a proper supervision and follow-up. In the custom granting, at the time of granting, we do all the type of evaluation, analysis, everything, and we come to the conclusion grant the facility. After granting the facility, when we are not followed up or supervised carefully, customer may go deviate from our original plan, original contract agreement. It will sometimes go, the facility may go bad because he may not be able to pay according to the schedule. A small example I'll give. When we grant a facility for a paddy milling, the paddy miller, right? So when the application brought to us, the capacity was certain about 5 tons of capacity. So we have granted the facility customer to maintain at any time 5 tons of paddy can be processed in that paddy milling process. But customer what he did, he expanded it to 10 tons, large capacity. Right? Because the bank has not followed up the supervised after granting the facility, was this one. The customer could not service the loan because the raw material requirement, paddy requirements could not meet whatever required. So we worked out the 5-ton capacity based on the availability of raw material. But customer has tried to expand it to earn much profit, end up in disasters. So this is very important. After granting facility, see whether funds are used for the purpose which have been given. The supervision of credit means ensuring safety of the advance, for which the bank will look to. Periodic assurance on availability, existence of tangible security obtained through a physical verification of security. Factory, warehouse, at any service. One side, you have to see whether facilities serviced, the funds are utilized for the purpose that we given. Secondly, the collateral. If the collateral deteriorated, then the risk of recovery increases. So therefore, it is practice in the bank. Every 6 months, you have to go and do an inspection for each and every collateral you take, security, physical verification. Even the immovable property taken as a mortgage, every 6 months, see whether the customer has been any sub-mortgages, any leasing, any rent out. Sometimes he may portion here without telling the bank, I may be sold somebody. Sometimes you may find that unauthorized encroachments may be there. When you go for recovery, we will be finding difficulties. So, periodic the inspection is very important as supervision. Compliance by the borrower on the various terms and conditions stipulated for conductor and clause. So we list out certain conditions. There are in our loan agreement there are two types of conditions. One is general condition, other one specific conditions. Specific condition related to that particular facility. By looking at the time of the appraisal, what we have found that it has not been done correctly, and we have put certain conditions to conduct. For example, we may put a condition to customer to maintain stock levels, stock turnover, and stock resident period in certain number of days. See whether customers are doing that. Sometimes if your customers have overloaded this raw material, so what will happen? Number of days will increase. It will in turn make a crisis situation for working capital. So this is very important to, after granting the facility, whether the terms and conditions are, the customers have been compliance by the customer. Monitoring performance to check the continued viability of the operations. With the customer's manufacturing process, whether it is viable, because there should be sufficient orders should be there, sales should be there, supply line should be there, no material supply and other things. Labor requirements should be looked in. So these the monitoring performance check the country viability and verification of end use of bank credits. This is a very much important thing where the customer use the funds for purpose which are being given. So can you remember we discussed in our sessions cash flow statement. Another important document we can find the end use of funds of credit. Safety of loan directly related to the basis on which decision to lend is taken. Type and quantum of the credit to be provided, terms and conditions of the loan. There are two prolonged approach, pre-sanction appraisal, before granting the facility to determine the bankability of each loan proposal. We are not going to give loans to each and every person who asks for a loan. The meaning of appraisal is to find out whether there's a bankability, to what extent bank can take the risk of granting that facility. That is pre-sanction appraisal. Post-sanction appraisal to ensure proper documentation, follow-up and supervision. Okay. Pre-sanction appraisal includes, I repeat this, we remind you what we have done in the earlier sessions. Most probably this has been done by Dr. Loganathan, the credit evaluation process. Concerned with the measurement of riskiness of a loan proposal, loan proposal. The requirements are financial data past and projected working results. We normally do the financial past analysis, ratios, and we'll do financial data analysis for the past. But the projected balance sheet and the P&L and the cash flow are very important. After granting facility, the results compare with the projected figures. Any deviation, immediate corrective action should be taken. Detailed credit reports is complied on the borrower surety. Right? Periodically, credit report has to be customers' ability and surety and complete. Then look for market reports. How the market moves. Market analysis is very, very important. In our discussions, we always insist the market. Market is the sales. Sales of the customer. Sales are our cash flow for recovery. So the market stability is very, very crucial. Periodically watch the movements of the market, how the behavior of the customer, their clients, their customers, right? Product, quality of the product and the customer behavior. raw material supply. So this is very important in the market. Then final and audited accounts, right? Audited accounts we collect and find out the last 3 years or 5 years how the trend is. Income tax and other tax return assessment. Now, another important factor is before granting, at time of granting facility, if the customer's income is above statutory income, according to Inland Revenue Department requirement, above the statutory income, most of the bankers as financial institutions, lenders, ask the customers to open a tax file and get a tax assist. Why the tax assist? If the customer is already opened a tax file and he is paying tax, you ask for the tax returns, tax assist. Then it will give you some idea of the customer's statutory income. But if the customer is not paying tax, we should not insist the customer to open a tax file. What we need is ask the customer to bring a what do you call assessment that what do you call it? A report called on the Inland Revenue Department, return from the Inland Revenue Department, right? The income has been declared for taxes. When the customer has declared his income for tax purpose, when the certificate is given by Inland Revenue Department that income has been declared, that income is sufficient, we may accept it. That's why I accept. Whether customer paying tax or not, it is not our job. We should not. No, we are not tax collectors. No, we are not tax collectors. Let the tax department do the tax collection. Sometimes some customer may have income, but he is not liable for tax. His income may be exempted from tax. Right? So we don't know these things. Therefore, we'll ask the customers to bring the income has been disclosed, or income has been given for tax purposes, declared for tax purposes. If the customer paying tax, okay, we can get a tax receipt. The confidential report from the other banks and financial institutions. This is another important part. Confidential reports from the other bank. No customer is paying what you call solely banking with us. Very rare. Today, almost all the business customers are having 2 or 3 accounts with the other banks. So we have to get confidential report from the other banks about the operation. Now you know what procedure. We cannot ask directly from the other bank, but they are not supposed to give information under the duty of secrecy. It's an offense. Therefore, through the customer, we will get the reports. Through the customer. I ask the customer to make a request from the other banks, you a report, and you give the format what you needed. Okay. Then this the other important part is very common one is credit report. Now, credit report has to be regularly updated. Now, according to the new regulations, new intervention, there are a number of new activities has been incorporated. Therefore, this credit report has to be updated regularly, at least once a month. Whenever any facility goes up, whenever any changes in the facility, anything along the operations of the customer's account, let me check returns and all, and update. Okay. The latest one is in the credit CRIP is, we have come across this one, is called Credit Score. Credit Score given by the CRIP. So, right? So there was I don't know if it has been implemented. It was supposed to be given last year. Due to this pandemic position, it has not been implemented last year. So at any moment that will come to force. Then the report, not only the credit report, You have to get another report from our Sri Lanka. It's called credit score, right? Quick report and the credit score of the customer. Then you can easily identify the riskiness of the customer. The appraisal should reveal whether the loan proposal fair banking risk. Fair banking risk. There's no proposal without risk. No proposal without risk. All proposal, there's a risk. So, see whether we have taken precautionary measures to mitigate the risk. That's all. That's all. Okay. Then comes to post-sanction control. Depends large extent upon findings of the pre-sanction appraisal. That means we are normally post-sanction controls and supervision are, but we did the same thing on the prior to the granting the facility. That will be appraised again, do the same thing to see the current position and do the comparison at the before granting half position, after granting half position. Requirements are documentation of the facility and aftercare follow-up. With the documentations are correctly and accurately executed. This is the most crucial part we have come across. Last session I have mentioned that. The documentation is the most weakest part in our credit plan management. Therefore, before the documents are put in the lodge in the safe, check the documents are perfectly executed, correctly registered in the correct folios of the land registry. If the stamp duty are obtained correctly, when it comes to votes is defaulted, then you cannot rectify. Okay. Supervision through monitoring of transaction, the loan amount. Okay. The amount needed. Normally, when the business is continued, business is growing, do they need bank finance? When the business is growing, they do need bank finance because their financial internally has to be created. That is recovered. Right? So bank has to see that customer has been recovered the amount and the profit has been reinvested in the business. So the finance needed for the expansion is already there within themselves. If you are not taken out. Physical inspection of securities and books of records of the borrower. According physical inspection, I told you earlier, once in 6 months, all the securities has to be physically inspected. And the report has to be made. The periodical review, etc. What are the facilities to be reviewed periodically? Permanent overdrafts and letter of guarantees. Right? Permanent overdrafts and letter of guarantees when they are granted, it has to be periodical review whether continuation is needed or not. Customer is operating within that limits. Customer is using that facility properly. If not, for example, customer take given overdraft. Why you are given overdraft facility? For two reasons. It's a revolving facility. It's a revolving facility. For the operational need, that is what we call working capital. Operational working capital need, we may offer customer a permanent overdraft facility. It has to be used. It will be rotated, revolved. If it's revolving throughout the year and customer using within the limit, of course we are satisfied, we can continue for normally overdraft secure for 1 year period, annually it should be reviewed. Although it's a permanent facility. Right? If any customer try to, the second important thing we are granting a permanent overdraft facility for a commercial customer is if the customer's loan installment, when it comes to recovery, when the loan installments and the cash flow is not matching, the cash flow and the loan installment recovery is not matching, such instances we may offer a permanent overdraft facility where he can service the interest and after some time you convert that into a loan. Now, this is very important. We can look at operations of the business, customers, how they do it. So you grant a old covered order facility. If the customer's income is not sufficient to meet the loan installment, that means BSR is not, IR is not enough, you go for ISL, inter-service cover ratio, ISCR. Maybe possible. So give for a period of time, that means 6 months or maximum 1 year. So after 1 year review, I convert that into a repayment loan or other measures to continue the government overdraft. Other measures. Normally we give, there are 2 ways of mitigating risk in this government overdraft. One is build up security, that is cash build up. That periodically transfer some money to a savings account and savings build up to reduce the risk in government overdraft, because it is not just an installment payment. Or you may reduce the limit periodically for a period of time. Limit has to be reduced. So these are precautionary measures we take for government overdraft in continuation. Right. What are the objectives of post-sanction supervision and follow-up? To ensure compliance with the terms and conditions of the sanction, to ensure that assumption for credit sanction was correct, because we, at the time of granting a facility, we assume the customer's future performance. Yeah, since we are granting a facility to recover in the future, unknown, uncertain future. So therefore, we make certain assumptions. So ensure periodically that our assumptions are justifiable. May be correct, may not be correct. We cannot 100% accurate. We cannot do any assumptions. So any deviation, whether we need any rectification for those assumptions. To ensure end use of funds. I already discussed this earlier. To ensure adequacy of credit, ongoing basis. I told you this also. Ongoing basis, if customer is growing up his business, do they need any credit? Do they need any credit? Normally, they expand the cash recovery cycle will give sufficient cash flow. If it's not sufficient only, we may prefer further facilities, depending on the needs of the borrowers. To monitor health of the unit and detect signs of weaknesses in financial position of the borrower. Financial statements are results of their operations. So scrutinize the financial statement, take into mind that any changes therein. Compliance followed by post supervision. Ensure terms and conditions are intimated to the borrower. Now, this is one of the issues we are having at the moment. Most of the banks, even financial institutions, lenders, they are not telling the customers before signing the documents, have a discussion and tell the customer, these are the terms, these are the conditions, this is how you have to maintain the account, this is how you have to maintain the repayment, are these discussed before signing the documents. It is very, very important. If there is a guarantor, discuss with the guarantors, tell the guarantors, this is your liability. When the FTG is not paid, you have to pay this. I agree for it. This is very important to intimate the borrower and the guarantor about the terms and conditions. Sometimes you may find that you may come across certain guarantors are not aware of their liability. Sometimes the borrower has given wrong picture to the guarantor, get the guarantee signed. So just get the signature of the guarantor, we put ourselves in trouble. I'll give one example for this. There was an employee of a business organization asked for a facility of 5,000 rupees. Those things, it was a long time before when we joined the bank, this was happened in the late 70s or 80s. He asked for a facility of rupees 5,000 rupees for the bank. So his employer is the guarantor. His employer is the guarantor. When the guarantor has signed the application, the form, and sent to us, when we processed this in granting a facility, then at the time of execution, we asked the guarantor to present with the borrower to sign the documents. So we explained to the guarantor that you are signing a document for 50,000 rupees for this customer. And if you are not paid, you have to pay whole. He said, what? 50,000? No, I have signed only for 5,000. I'll take the responsibility for up to 5,000. Like that. This is wrong. So what has done this guy? When after signing the application, he put another bindu at dala, make it 50,000. So all the documents, other documents are prepared for 50,000. So we prevented the NPA at that time because our action. This is very important. Okay, this type of things happening. Sometimes, most of the instances, this borrowers tell the guarantors, Sakyeta Sankara. Make a Sakyeta Sankara, witness here. They don't understand the gravity of this liability. We default, he had to pay, and he will be appearing in the crib, so he cannot borrow any further there after that. It has to be intimated to the guarantor source at the time of execution. This is important post-sanction supervision needed. Borrower advice issue the same. Right? Now we do this. What is that? Document. What is this document? Yeah. We take customer to sign and give the document about these terms and conditions. Right? We take the terms and conditions, put in the document, ask the customer to sign and give. If the customer has not read that, even the bank has not read that. Offer letter. Offer letter has some documents. In the file, like documents, even customer doesn't know what to say. Okay, so ensure that it has been that receipt of the accepted customer terms and conditions record. Ensure all terms and conditions are fulfilled before disbursement. This is very, very crucial part. See, all the terms and conditions are fulfilled and the documents are correct before disbursement. After disbursement, if you call the customer to do any rectification, he will not come. He never comes. Why? He knows that bank is in a bad wicket. If he defaulted, bank has no hold to file action against him or to do the recovery. Therefore, whatever you do before the disbursement. The customer knows this. There are certain, certain customers, very cunning fellows. After giving the loan application, and while it was processing, before sanctioning, he comes to ask for a TOD. Now what has happened? You have disbursed part of the funds before the documents are executed, before the loan has been sanctioned. Customer taken the money in advance. Because we trust the customer and grant the facility. The TOD is very, very vulnerable product. Carefully handled. Okay. Right. Monitoring that's about supervision. What about monitoring? Monitoring is not about dealing with the bad loans. Whenever you are asked for most of the examination, you ask this question. Most of the participants, candidates reply is monitoring is dealing with defaulted facilities. No. I told you, monitoring has to be started before granting the facility. It's about access to keep good loans that way. about how we may be able to detect weakening loans and keep them from becoming delinquent or worse. Okay, so monitoring needed to detect any loan going bad, you detect it and try to deal with that, to rectify the weaknesses and try to put them in the correct path. If it is a good loans are moving in a good flow, let it go as it is. You do not worry about that. Let it go be as asset quality depending on how well we make the loan and how we manage the loan. How we will make the loan, how we do the process pre-sanction, and how we manage the loan after graduation. Which borrower need monitoring? All the customers, all the borrowers. It's a rule of thumb. What is attention and care? Before a problem develops into a stress, we have to take action. That's why this monitoring supervision follow-up are important to identify the customer stress situation. When do the monitoring supervision and follow-up, we may identify the warning symptoms. We'll discuss next session is that. We identify the warning symptoms coming from different areas of the customer's performance area. Financials, business, management, marketing. What are the problems which will in turn affecting our recovery? Becoming a stress, customers becoming a stress, unable to pay the fees. So this part is very important. This part is very important. Identify them. Then stress develop into distress. When it comes to stress, customers develop distress. That means if one installment in fall in arrears, he may not be able to pay that. Then second installment of fail, third installment, then what will happen? Facility is going bad, he is in a distress situation. So he has only one income source to pay 3 installments, maybe. So you have to take action immediately. Before facility get into 90 days in arrears. Now with the new regulation of impairment, right? So it has to be first month itself when identify the weaknesses. Then before distress results in default. After 90 days, it is difficult. It is difficult. It is growing. Therefore, especially payment default has to be taken very important. What is important? Everything and anything and everything which has an impact on the serviceability of ultimate repayment of a loan. Management. When you look for management, the decision making of the performers and is done by the management. So we have to closely monitor important how the management behave. Most of the banks we discussed in our interpretation of balance sheet, interpretation of financial statement, that management weaknesses are quality of management can be detected in certain areas of the financials. Right? Basically, inventory ratios, data collection ratios, creditors ratios, then cost ratios, cost to sales ratios, financial ratios. You can identify as management weaknesses. The other one is important part is the larger circle because that is a cash flow, liquidity, and leverage. Why the cash flow deteriorating? Maybe due to the sales are not sufficient, or maybe due to outflow are greater than the inflows. Cash outflows are greater than the, so That is where the management decision is important. Then the liquidity, availability of funds to meet day-to-day operations, and leverage. See, the customer has sufficient fund to survive. Then the external factors, industry and economic conditions, then other technical, right, marketing, all things. All these are important for this making the decisions. But the frequency of monitoring is reviewing, analyzing annual numbers like reading a history book. Why? You get the information of the customer, of the balance sheet and financial. It's a past history. The previous year's operations only, this reports. See, it's already happened and gone. That particular environment may have been changed. So it is not actually, it is only a guideline for us to look into how it was in these circumstances, how he operated last year. So future will be always change. Wondering is like reading a newspaper. That is current version. Even better knowing what will be in the newspaper before you print. Before the newspaper out, you can see the report. You are taking the practical how we do, the people doing the monitoring part. Now, whenever a customer wants to buy a certain asset, right? Now the latest is going through the newspapers, right? Sunday newspaper, you get a supplementary. Hit that door, Sahipita. There are a number of all the newspapers having this service given there, publishing the newspaper. So people on the Friday evening itself try to get this paper and try to make them before Monday, Sunday, a newspaper is out, and Saturday itself they are doing the deal. See how doing that. Therefore, monitoring is a routine or continuous measurement of progress while the project is ongoing. Checking and measuring the progress is monitoring. Analyzing the situation is monitoring. Reacting to new events and opportunities and issues is needed. So check the if you can't measure, you can if you can't measure a performance, then you can't monitor it easily. You should always put in the measurable terms. And analyze the situation. Situation may be changing. Environment may be changing. Due to the change of the environment, how best we are reacting to events and opportunities. Okay? You can't measure it, but you can't manage it. This is very important. So monitoring, there are 4 steps. Define objectives. You define the objective. Why you are doing monitoring? Then what are the indicators? Checking indicators. These are the areas. Yeah. This for this particular customer. These are the areas I am looking into. This is the performance indicators. This is the level. For example, data collection period, this. Number of days, this. Cost ratios should be maintained at this. Customer withdrawals or drawings is the maximum limit. So these are the indicators. When you do monitoring periodically, you check that. Yeah, the important part to do monitoring, collecting data, information. Information is very important. The current position is specifically needed. Normally past data Old records are available, but current is very important to compare where the customer is, which direction customer is moving. Analyze the performance to evaluate need any attention or leaving as it is to move. The action will be based on this monitoring steps. The key to prepare the bank by identifying red flags. Credit monitoring is to operate the bank by identifying red flags throughout the term of the loan, whether payments are timely or not. Whether regularly, if the customer, I told you earlier also, it's an ongoing basis. If the customer is paying regularly, facility, even though you had to do the monitoring part to identify red flags. The loan agreement outlines the terms and conditions deliberated over hours, often days, at levels of management. Right? Credit monitoring can be defined as a supervision of loan account on an ongoing basis, keeping a continuous watch vigil over the functioning of a borrower's unit, confirm that the account conforms to the various assumptions made at the time of sanction. In other words, credit monitoring is to maintain asset quality of the bank. Right? Why is it important? Ethics is an asset, not a liability. Business ethics. It's not a liability. It may increase the transaction time, but reduces the transaction cost. You may need a lot of time to do this. You are invest the time, but you reduce the cost of default. You reduce the cost of default. Good sanction can become a bad loan if not properly dispersed. When you're granting loan, we discussed earlier, need-based finance. At the time of customer need, disperse the finance. If not, what will happen? You grant the facility, sanction the facility, release the facility on the very first day, with the customer need or not, we are not good. That's where most of the facilities are going bad. But bad decision cannot be care of credit control. At the inception, we have made a wrong decision. It cannot be rectified by doing monitoring. Need for the credit monitoring, prevention is better than cure. Prevention is better than cure. Take action before it getting deteriorated. To avoid slippage of accounts into non-performing advances. Slippage means going to transfer NPA. Before 90 days, take action. Before 90 days, they have to take action. Right? So, according to impairment regulation, has to keep a stage 1 capacity. In stage 1, not go to stage 2 or 3. When you go to stage 2 and 3, you have to make big provisioning. It will deteriorate our profitability. Ensure use of funds. Ensure compliance of terms and conditions. Banking is depending on projections, assumptions, estimates. Hence, monitoring of advances is very essential. To compare projections versus actual position. To compare your assumptions are viable. To compare our estimates are acceptable. So monitoring is very important. Good sanction can become a bad if not properly dispersed as poison. Stitch in time saves time. That's it. Credit monitoring has become most important in your system-driven NPAs and growing of NPAs. Where system-driven NPAs, most of the facilities are now not physically monitored, it is system which is doing. Recovery is automated, system-driven. Recovery is automated. So, monitoring is very important. If you are not paid in due date, monitor the reports generated from the system. Closely monitor will allow not to grow the NPAs. to guard against the human tendency to deviate from stipulated terms in case of necessity, which is particularly exists in the case of advances. Due to human tendency, sometimes we may take certain things as granted. Those certain things we are not taking much serious. Customer will do necessary things. No, it is our duty to see that with the terms and conditions customers follow. Okay. The bank's ultimate purpose of doing all types of businesses is to earn more and more profits, and NP affect adversely the profitability of the bank. First session itself, first slide itself, we discussed this. To ensure delivery of credit after compliance with pre-disbursement terms and conditions. Right? To maintain credit quality of the safeguarding bank's funds lent. We are granting others money. Our sources funds are not only depositors, even shareholders' funds are under threat. To contain slippage by observing early warning signals, meticulously and putting in place required corrective measures in time. It's very important. Identify the warning symptoms and take corrective action in time without postponing, without which is getting complicated or serious. To initiate quick and effective steps for upgrading, identify weak accounts, substandard accounts, non-certified, within the maximum period of 3 months. Before 90 days, try to do the recovery. Because after 90 days, it is considered as a non-performing advance. Still, if the employment regulations are also implemented, still we consider arrears of 1 to 89 days are required. It's a weak account, but showing in the regular section. So our attention is to that area very weak. We must take the action on the very first day. Right? Now, in manually when we are doing, we put the amortization card into the ledger. When the funds are not sufficient available, it will be returned back, saying that it will be returned back. Funds are not available. So immediately we write to the customer. We didn't have telephones and other communication systems available those days. So those things were developed in 1980s, before 80s. So immediately we write to the customer. If you are not responded, within 1 week, we try to visit the customer, try to recover. Before the next installment in due, we try to recover. What has happened now? After everything is automated, system has been checking when the funds are available. The funds are not available, the installment was recovered. It is not coming out, it is inside system. Therefore, the system generates a statement and daily. There are 3 copies of that coming out for the system. One for the manager, one for the credit officer, one for the file. So, you have to go through daily. Now there are a lot of communication is available. You can call immediately, you can send an email, you can send a message, text message. It's very important. Before the next installment falling due. Right? So before 3 months, and before transfer NPA, non-performing advance, do the recovery. So monitoring help us to identify this easily, and we are directed by the monitoring to do such actions. To ensure that borrowing will be compliant with original terms and conditions, ultimate object of doing all types of businesses to earn more and more profits, and NP affect the adversely profitability of the bank. Our result is that. The objectives of credit monitoring as follow-up: timely credit delivery, that the disbursement loan, at the time customer needed, right, to do the delivery. So monitoring follow-up is important. After compliance with the laid down procedure and conditions, terms and conditions, with due precautions. To ensure that standard accounts are continued to remain standard and do not slip into NPA as previously. Now this term we are not familiar. Standard account means not transferred to NPA, still in the regular section. Right? Timely identification of stress assets and taking appropriate corrective measures to arrest them from slipping. Right? This is I discussed earlier also. Stress asset. What is stress asset? Which assets loans are becoming pressurized for non-payment. That installments are not paid on due date. Sometimes part of the installment paid and part is in arrears and it's cumulative for next 3 months. Like such stress now to take action immediately to rectify that. They avoid unacceptable slippages by observing early warning signals, particularly and putting in place in the required corrective measures in time. Warning symptoms has to be followed very carefully. So we discuss in this session what are these warning symptoms. When does the credit monitoring start? Credit monitoring starts on the moment of the possibility of new advances visualized. That is the time of appraisal. The principles of good lending: identify genuine borrower and viability of adequate security, collectively known as due diligence, of paramount importance. Right. Now, credit monitoring is normally this in Indian terms what we call term loan, facilitating disbursement. What are the monitoring to be done? What are the monitoring process to be done? Loan to be disbursed as per the schedule approved by the bank. Even a business loan, not only a normal, this we do for the properties, housing loans, but even for a business loan, as and when required by the customer only should be disbursement as be done. Can you remember we discussed cash flow projections? The projection is fine, we found identified whenever there's a deficit. Whenever there's a deficit, we have to disperse the funds. That's a need-based finance. Disbursement of installment related to actual progress in implementation of project. When you finance your project, site visits are periodically find out whether customer utilize the funds release earlier stage has been for the purpose of having granted, and whether recommending to release the next stage for the next requirement. Monitoring is important. Progress in project implementation should be as per the schedule. If any delay, seek borrowers be on steps taken for rectification. Specifically, some projects when they started, sometimes may not be implemented or completed during the plan period. Find out for the reasons. And there can be certain instances, uncontrollable factors. So you cannot avoid. You have to absorb it. There can be avoidable factors. Try to rectify it. Monitor cost means incurred borrower's contribution research for cost overruns. Why cost overriding? We know that most of today's background, today's environment, we facing this difficulty. The cost is increasing regularly and it will affect the performance of the borrower. When it affected, our recovery is serious. Now we have to ask bankers, lenders, take into account the current prices situation in the country, specifically increasing of fuel prices. Increasing of fuel prices are badly affecting the transports, badly affecting the transport cost. When the transport cost increases, what will happen to the sales? What will happen to the sales? If the sales are declined, our recovery is going to decline. Therefore, now, every time this type of changes taking place, discuss with the customer. Discuss with the customer. How is going to be adjusted? He is going to adjust for the situation, and we have to adjust our loan installment accordingly. Otherwise, our loan will be go bad. It will be appearing in the NPE. Customer may not be able to service. So the monitoring is important. You cannot ignore and wait. So watch for the situation. Especially today's our environment. Our environment is very crucial. So it will in turn increase our NPE. To curtail our NPA, identify the problems and solve the problems. Periodic inspection enables banks to keep a check on the stocks charged to the bank. Stock specifically check. Obtain first-hand information about the functioning of the unit, specifically operation units, manufacturing organizations. And hypothecation accounts is called mortgage account. Hypothecation is mortgage. Verify adequacy of stocks. When the stocks are mortgaged to the bank and obtain a facility, physical verification of stock to be test check. You have to do a physical verification of stock. So normally how we do it? Specifically, stocks are mortgaged to the bank. We ask the customer to provide a stock list. Stock list, right? The stock list is prepared by the customer, and he gives the description of the stocks, cost price of the stock, and the value of the stock. These are the information available in the stock list. And the stock list final total, you check. Normally what happens is practically, you check the final total and see your loan amount is 50% of the, within 50% of the stock value. Normally we have the ratio of loan value, twice the loan value, the collateral should be. Stock should be at least twice. See whether that ratio is paid. But we have to be very careful because stock list is prepared by the customer. Valuation is done by the customer. That's no professional valuers doing for stock valuation. Therefore, very important. The physical verification of stock, you do specifically go to verification, test check, sample check. Sample check. There are certain customers try to mislead us. Some long time you will about 1970s, we were recession period that import ban. Period import ban raw material and very difficult situation. In that period, we had to go for inspection of shirt manufacturing company. Shirt manufacturing loan. We are granted a facility to buy raw material and manufacture shirts for the market. So we went, we checked, given a stock list, how many dozens of stocks are there in the stores. So myself, manager and myself, I was a junior, I was at that time, clerk. So we went for inspection and manager was counting the boxes horizontally and vertically, try to multiply how many dozens of shirts are available. So I saw certain boxes actually I took a yardstick from the table and pulled one of the boxes out. Empty. There was an empty box. So customer in between empty boxes of all. So we had to count all the stuff, the entire lot to check physically. The stocks mortgage to the banks are tallying with the stock list. And අපිට ඊළඟ මේ සාමාන්‍ය මේ පැඩි pledge කරලා තියෙන ගොඩක් තැන්වල. This is Polonnaru and Ampara districts. The banks have taken paddy as a pledge and stored in the double-zero store. What takes a check the paddy, the paddy which have been kept inside the stores. Have you checked it? Sometime maybe the what you call paddy waste may be there, but work out gold වල තියෙන්නේ 10ක්. We එක 10ක් එක්ක තමයි තාම. So we do a test check. Visible verification of stock very important. There is the valuation of stocks to be done on cost price or market price, whichever is less. Customer deal with the cost take a garnipa. You work out the cost, check for the cost price for the market. What is the cost price and see what is the invoice value. So you value the stocks for whichever is less. If the customer is exaggerated the value and try to cover up the what you call security value, you can identify this. Then quality of stocks charge. What type of stocks are in the stock list? Stocks should not be old, obsolete, rejected goods, expired goods. Ensure stock is saleable. In the case of a default, you take the entire stock in our custody and try to put in the sale. Because it is saleable. In the segregation of stocks not hypothecated to the bank must be kept separately. There are businesses, specifically businesses which are done, they take others' goods for sale. That is not their goods. So those are not mortgaged to the bank. Right? If there are sometimes you may find certain traders, they get the stocks from others, you couldn't sell and pay. So those are not mortgaged to the bank. So you have no authority to take charge in the case of a default. Please current the bank. So therefore it has been separately accounted. Then you have a right when you go inspection, check the records, books, registered name by the must be verified to check the actual movement of goods, system of stock reconciliation with physical quantity. Now it is not that difficult because everything there, most of the customers have automated this stock maintenance. So you can just verify the system. Matching the stock statement of the borrower for limit sanction against the book dates. Appropriate documentation, evidence supporting sale of goods must be verified. This is another important thing. If I granted a facility on book dates, right? There's a facility called book dates. In value of the books, the debtors value, certain percentage of the value are given as a credit facility. That's called book debts. Assigning the debtors to the bank. Take an assignment about the book debts, receivables, debtors, and part of that will be see if the customer has been increasing the book debts by increasing the credit sales to get this loan. That has to be verified. Bank's name board should be properly displayed indicating goods type indicator. Where the pledge stores, bank name should be there. Then pledge account, there's a pledge. Where specifically import trade you get pledge customers. And then paddy and other billing you get a pledge accounts. Okay. If the pledge, not mortgage, pledge, where the physical custody of the assets mortgage to bank under banks and customers control. It's called constructive control of the bank. Ensure the stores is well maintained. Goods are stored properly, specifically chemicals. There are certain conditions to be stored, whether the customer follow that. Entries in the warehouse register maintained appropriately and required to conduct a stock audit. Right? In operations of the unit, what are the how to do the monitoring? Inspection will be carried out periodically to ascertain first-hand on working condition, activity and progress. Manufacturing organizations do an inspection, go for inspection, so monitoring, availability of raw material, spare parts, power supply, then alternate power supply or standby power supply, with other infrastructural requirements, with which are sufficiently available. Similar, sufficient manpower is available. Okay, these are some of the monitoring, what to monitor in the when you go for monitoring. Then finally, maintenance of inspection register. Whenever you go for inspection, you have to maintain a register by yourself. Bank must maintain a register to record comments and findings of the inspection. Now, this is very, very important. I have seen a number of instances where I have taken a number of branches, I have done inspections, I did audits. Most of the banks, we have not found the inspection reports. They go for inspection. But findings are not being recorded. Why it's important? Why it's important? It should be followed next inspection hour. Previous inspection report monitor whether the findings of the previous inspection has been rectified by now. Calling inspection rectify. If not, you can ask the customer to rectify those things. If not, you may put the charge on your link. Okay. The inspecting officer signature required. Have a report taken. Who is signature required? Irregularities, deviation to be brought to the notice of the borrower to be followed vigorously. And the inspection report is very important. Report has to be filed in the customer's general file. Whenever new inspection report comes, you have to replace it. It's very important because when the new manager takes over the bank branch, and you maybe not be there right through. So whenever new manager comes to take over the branch, he's having a guideline about the customer's background going to the inspection reports. So this is very, very vital. Put it document and in the register, or you may put a separate slip sheet and file in the customer's general file, not in security file. This is the general file you have to keep. Okay. Then check for the operations in the accounts. Non-payment of interest and installment, the due dates to be followed with about a wire or pay the loan installment in due date. Any cash flow problem? Okay. When the installments are delayed, sometimes customer may have liquidity problems, or because he are not followed up, he may purposely delay the installment. But why the customer delaying the payment of interest and installment, not paying a due date? It will help him to his cash flow, increase the cash flow. He can use that fund for any outflow. So that's why they are delaying, maybe. So verify that. Bank should have a system of issuing reminders in advance about the repayment obligation. Of course, now it's there. Most of the banks are following this SMS information system for customers when the payments are due. Then overdrafts. So another important thing. Cash credit is called overdrafts. Frequent overdrafts not be encouraged. Why customers ask a frequent overdraft? We discussed this in the working capital finance session. Why the customers asking overdrafts, POD specifically? Because they are liquidity problem, they are facing for liquidity crisis. Therefore, for bridging the need, we may entertain an overdraft facility. Now, what is a TOD? It's a temporary facility, temporary overdraft. How long is temporary? Maybe 30 days or 14 days, depending on the bank branches, the legal authority. So, if the customers cannot meet the overdraft, so repay the overdraft, within that 30 days, what will happen? There will be a problem for the bank, not only for the customer, even for the bankers. Because we are exceeding a daily authority. It's an offense. So therefore, frequent overdrafts should not be encouraged. If a customer asks a frequent overdraft, means he needed a capital need, a permanent capital need requirement is there. It can be fulfilled by a secured facility loan. Overdraft is facility revolving, and it should not be encouraged. Then keep in mind, very important is temporary overdrafts are not instruments for working capital financing. It's not working capital finance. It's a bridging of gap between inflow and outflow, short term. The bridging of a inflow outflow of customers' cash flow, a short term gap. Now, practical case is that customer can check in the morning asking for a TOD. He gives a check and asks for a TOD. Then you ask why I'm the Rashni. I made us the sales put the Ali checks again, given me. These days, sales are declined. Sales product Ali. It's a check sold given Ali ne. Check sold Looking at this explanation, justifiable. This need is justifiable because the sales are declined, and therefore checks are coming for payments. He needs some short-term finance to meet the checks. The question is facility grant. Whenever, whatever facility we are trying to entertain. The first question we are going to ask is, what is the repayment source? කොහොමද කියවන්නේ? එහෙමනම් අහන්න හොඳ නැද්ද? Sales decline නම් කොහොමද මිනිස්සු මේක ගෙවන්නේ? කොහොමද මේක ගෙවන්නේ? ඒකයි important. So we should not encourage giveaways. Its frequent request for overdraft should be looked into carefully. In case of shortage of working capital, consider for enhancement by a permanent customer. Right? Credits in the account to be checked to see the sales reported are routed to the account. If the customer try to increase the sales, increase the profit, bank loan या गन्ने ना बटे customer profit टेक वाली करो लो बिल्कुल वो बोलते credit sales वाली करो sales वाली करा हम credit right profit टेक P&L लेके profit टेक gross profit टेक वाली then it shows that net profit will increase. So you work out the profitability ratios. We are very happy. Good profit is there. The number of percentage. You have forgot about one thing. Profit will not pay the loan. Profit will only give the cash flow will pay the loan. Till this credit sales are realized, cash flow is not affected the cash flow. The cash flow is not there. So how do we go to recover? Profits are there, but no cash. Carefully evaluate. Look for transaction with sister concerns. Sometimes you may find we are not running a facility required for a subsidiary company, sister company, a subsidiary or a branch organization of the same business. We reject that. But as customer may try to divert the funds from the parent organization to sister companies. Sometimes sister companies may not performing well. Then book test statement to be scrutinized to ensure that the credit sales are realized within the stipulated period. Data collection has to be maintained properly. For all this, check for the borrower steps taken to recover the dues. If the debtors are more than 6 months, or when the monetary fine there are in the wage analysis of the debtors, you may find that there are number of debtors are over 6 months. So those are bad debts. Either you have to write off or ask the customer to give a cash discount and try to recover. It is much better than borrowing from the bank. Bill purchase discounted payment due date to be close to month, postage especially. Right? Correct. Ensure that securities offered have adequate and proper insurance cover on continuous basis. Insurance cover to be there on continuous basis. Insurance should be paid before it is getting expires. We may make a given no expiring itself. Expire was say there's no claim. You cannot make any claim to that issue under insurance in the case of some sort of problem. Okay. So therefore, adequately and proper insurance cover to continuous basis should be there. Cover to be obtained for full value of the security. This is very important. In vehicle mortgage, you may find that the customers try to get third-party insurances. Stock mortgages, customer may not be insuring for the full value of the stocks. So this has to be kept there. The inspection and check very carefully. Value of security should be more than the limit sanctioned and deterioration is quality checked. Insurance premium has to be paid regularly. Best, you get a what you call standing order to pay the insurance by bank. That's a good method. Even if the customer has not deposited money, you may debit the loan account and pay the insurance. It may more what you call insurance will be when the insurance is updated, so you have a risk coverage is very high. Okay, your risk coverage can be increased. Finally comes to the MI system, information system. Seek information at regular intervals for progress in implementation of the project finance. So when you do a project finance for a project of the customer, the MI system must be there to get information about the project. Quantum of production, sales, level of current assets and current liabilities, stock position, debtors position, creditors position. Information about this is very vital for us. The debtors, creditors and stocks are part of working capital. Levels of current assets and current liabilities are part of this. In the fund flow and the cash flow, very important. Cash flow, why? To see what are the inflows, what are the outflows. Then fund flow is how the changes of the assets during a period of time. What purpose? Where the funds are moving. Funds movement statement. And information may be sought on regular basis. At least quarterly you get this information. The statements called for should be enable bank to monitor the levels achieved, vice versa, projected figures of the unit. To compare the reports with your projected figures. Stock statement should be reveal the quantity of paid and unpaid stock, their price and movements. Right? Stocks which are bought under credit has to be checked. What are due? Statement on book day should be revealed age-wise breakup for debtors and creditors, age and leases of the debtors is needed. So I told you earlier, any debtor more than 6 months is a bad debt, 3 to 6 months is a doubtful debt. Sufficient provision must be made in the P&L. Timely and qualitative information must be obtained. Qualitative information. Okay. Repeat your sorry. Okay. Post-trading supervision, 3 stages: regular surprise verification of security, stock audit, updated security control statement, the repayment and the rollover. These are what we already discussed. Then comes finally follow-up. What is this follow-up? There are 2 ways of doing follow-up. One is financial follow-up, other one is legal follow-up. Financial follow-up is obtaining financial reports, quarterly operating financial reports, right? Maybe in the draft. Now, if you find that companies like quoted companies, under the Companies Act is compulsory to prepare quarterly financial drafts and publish in the newspapers. But it's not for the vast area of unquoted companies and private companies. Therefore, we have to get this information very carefully. Quarterly financial statement, draft balance sheet and the P&L and the cash flow. Very important. Then quarterly stock list. stock to win if the stocks are mortgaged to the bank. Right? That's about financial follow-up. Then the legal follow-up. I told you earlier also, before the loan documents are lodged in the safe, documents has to be checked whether you are taken correct formats. The correct formats mean those days into when we take printed formats, we fill it up by typing. Sometimes formats are maybe different. Now most of the formats are in the computer. You are running the computer. Only you update the customer information, terms and conditions, amount, and correcting the forms. Now, what the problem here is, the present position is, to what extent this computer generated formats are correctly updated. Most of our stenographers, what they do, they take application, they download the former old format or just grant it for somebody else and try to start altering the necessary fields. Okay. There were cases that is documents have been forwarded to the courts. They may found certain discrepancies in these printed forms, computer generated forms. One instance I said it was happening there. Colombo district courts. We have bank has forwarded the documentation document to support the customers which have borrowed the due on the bank. So bank is a bank document to prove the case. So the defense lawyer taken out this this particular document and showed to the judge and say, Your Honor, see on the first page of this document says this loan, this agreement between this bank and Mr. Mr. Silva, one Mr. Silva, for example. And see, I call your attention, Your Honor, to page number 3 of the same agreement. It says this loan agreement between the bank and Mr. Pereira. The question is to whom this loan has been granted? Document here could not be proved because there are two different names in two different places. Sometimes amount is differs, sometimes terms are differs, sometimes period is different. So carefully read the document. Documentation, I told you earlier also, documentation most weak, last week only mentioned this. Most weakest in our credit management is the executing of documents. We discussed last week, can you remember? We put the blame on the lawyers. No, it is the people who are being executing the document, making mistakes. Okay, so there can't be any mistake in the document. There are words called mistake in our vocabulary. Either it's a fraud or negligence. Both are multiple offenses. Okay, so documents should be adequately stamped. Documents should be adequately stamped. How much of stamp to be affixed? Over a period, time to time, annually, when the budget comes to the parliament, you may find that stamp duty may be adjusted. So during that period, particular period, what is the stamp duty? Whether you have paid it correctly. How do a stamp duty should be paid? The methodology of stamp duty payment that should be applied accordingly. Now, Regarding this particular one, we'll discuss. There's another session, litigation. And the litigation I'll take is how to pay the stamp duty. Then the authorized person should sign, execute the document. Now, who is this authorized person? In sole proprietorship, there won't be any problem. Only one person. Individual, no problem. In the joint loan, joint parties has to sign. In the case of a partnership, there's no one person or two person authorized. Although the current account is maintained by two persons, there are five partners. All five partners have to sign the documents to execute the document. Otherwise, the document is not enforceable legally due to the, as per, according to the Partnership Ordinance 1894, it says each and every partner is liable for any liability jointly and severally. That's all the partners. Then comes to the companies, public companies, private companies. Right? Those companies who are authorized to sign, there should be a board. There should be a board resolution authorizing a director to sign or directors to sign. Without the authorization signed by somebody else, that document is null and void. So you verify the follow-up whether the board authority is there or to sign that person, the director who have signed the documents. Then comes to power of attorneys. When a power of attorney is assigned to sign a document, see that at the time of executing the document, the principal should be living. The time of executing the document, the principal should be living. If not, what will happen? In the executed time of document by power of attorney, if the principal is not living, he's died, the power of attorney has been already null and void. It has been renounced. So the document is legally not enforceable. Okay, so see that who is liable to authorized person, and then it should be properly executed. How it has been legally mentioned to execute, by whom it has been done accordingly. Movable properties, mortgage. Mortgage of a movable property can be executed by a bank officer. Can be executed by a bank officer. But if it is an immovable property, it has to be executed by a notary public. Okay, so we should know it's how to whom to be executed. It has to be properly executed, and then complete in all aspects. Complete in all aspects should be completed. Every part, everything has to be fulfilled. Then comply with the terms and conditions. Documentation has to be comply with the terms and conditions of the sanction of the facility. Next follow-up cover the insurance cover. Renewal of insurance, the risk cover. I told you earlier, the risk cover we had to find out very carefully. Better to obtain what you call standing order to pay the insurance by the bank. Here again, we have to understand the risk and the justification of insurance. Now, specifically, it's happened in the leasing agreements, or even in the mortgage agreement, you find the vehicle mortgage at the time of mortgage or the executing of this leasing agreement, the insurers you could get for the value of the insurance, right? Value of the insurance, right? That is the market value of the, not the book value, not the loan value, but the market value you have to get the insurance. Now, for example, pay after 2-3 years, the loan installment has been paid. Rental has been recovered. Now the book value of the asset has come down. But you are doing the same insurance, same amount of insurance for that particular asset for the insurance company. Sometimes the market value has come down below the book value or with the book value, or with the book value, below the book value. You don't need to insure it for the same value, paying a higher rental for the insurance companies. Okay, can reduce the insurance cover. So you have to monitor this carefully. So insurance cover should be obtained not for the book value, not for the loan value, but for the market value. Renewal also has to be same terms and conditions has to be reviewed. Right. Okay. Shall we have a small break and come? Continuing the latest changes in this risk after COVID-19 pandemic. And more, this is the latest edition in my handout. There a few slides on this pandemic, managing and monitoring the credit risk after pandemic 19. Okay, we'll have a small break and come back and continue. Okay. Okay, shall we start? Okay, adjusting to new dynamics in credit risk management from the perspective of financial institution conditions that the COVID-19 crisis triggered have specific implication for managing and mitigating the credit risk. This is what is one of the researches done by the UK-based company regarding the after post-COVID about the credit risk and the financial institution, what are things have taken place. In the past 3 months, banks have been adjusting to the new dynamics and exploring potential new approaches to the challenges. The analysis gauge the impact of crisis on national or regional economies as a whole, the impact by sector, subsector, and specific credit risk problem requiring a real-time monitoring. What are these things what you are talking about? In the present crisis, changes in the creditworthiness differ by sector and subsector to greater degree than they did in the previous recessions. We talk about the previous recession, that is 2008, we had a recession, 2013 we had a recession. Completely different position with this COVID-19, creditworthiness of the customers. Changes the creditworthiness. Ability to repay, willingness to repay, both are getting changed. To what extent, we have to measure for it. Certain industries such as food distributors did better in the crisis and struggled to meet rising demand. Others such as telecommunication and pharmaceutical were little affected. Food distributors of course didn't affect much in this pandemic situation. But as you all know, certain sectors such as travel, transportation, tourism, and hospitality have been severely challenged. So the industries have been severely challenged. So we also are facing at the moment these tourism and hospitality industry, travel and transportation are severely affected areas. Vending machines we are faced with a new and unfamiliar environment in which they must evaluate and monitor risks with limited visibility and access to reliable data. This is a very important part. Reliable data. To what extent we are getting reliable data? Most of the time, what we have observed in Sri Lanka specifically, the data may not reliable, not available properly, or data are sometimes manipulated to certain elements to their benefits. Early experience is revealing a path forward. As banks distinguish the varying impact the crisis is having on different sectors and subsectors of the economy, and direct more attention to the financials and business model of individual households and companies. Okay? All these sectors have been experienced this difficulty. Data and analytics capabilities are proving essentials to the solution. Leading banks are accelerating digital transformation to enable real-time monitoring and effective mining of transaction data, while automating the feeding of results into decision making. Now, this is what the most of the large banks have been doing, leading bank. They are digital transformation to the real-time monitoring, right? Manual or what are system available were there have been diverted more to digital transformation, digital banking side. In Sri Lanka also, we have most of the banks have been accelerated this digital banking side. The customers to maintain their accounts, watch them, do real time, use ATM machines without coming to the bank. Banks were closed most of the time due to lockdowns, but the customers were able to manage their accounts through this digital transformation systems. Okay, new approaches are emerging quickly, not only for underwriting and monitoring, but also customer assistance and loss mitigation. Now, these approaches to emerging quickly, only underwriting and monitoring, but also customer assistance and loss mitigating is an important part. To mitigate the loss, new approaches has been developed. The second issue is that, quite apart from COVID-19 crisis, dislocations, traditional collection method, calls, emails, letters are becoming less effective as the customer preferences decisively shift toward digital interaction with their banks. So some of the methods what we are used, debt collection, giving calls, sending emails and letters, are not more effective now. Now everything has been, most of the customers have been shifted for this digital interaction. Large wave of non-performing exposures. Current reform will soon absorb the institutional resources. Therefore, now the large NPAs are increasing. It will absorb the institutional resources. The financial institution resources going to be deteriorated due to this large wave of non-performing. NPAs are being increasing. Despite the abrupt changes to employment, income, and commerce since the onset of COVID-19 crisis, consumer credit files are not yet showing signs of distress. Right? Although these changes have been taken place in the unemployment, most of the employment has been deteriorated, income has been reduced, some employees, But still, our credit trials, bank credit trials are not showing signs of distress. That's very important. Still, banks are managing this crisis situation effectively. It's not to say that consumers' finance are withstanding the current economic pressures untouched, but when average across the large population, experience data shows clear signs of decreasing debt and growing credit scores. Now, the Experian is a company which have been conducting the survey. Experian is a company conduct this data. So their data shows that decreasing the debt and growing credit scores, right? Credit scores are increasing. Unemployment and loss of income can wreak havoc on the credit and finances. Mostly due to the COVID-19, this unemployment problem has come up. Most of the factories were closed, businesses were closed, sales were declined, therefore business organizations were closed. Especially for the tens of millions of people who have little or no savings, they can tap to cover the emergency. This is worldwide crisis situation. Right? It's unemployment and loss of income, and for millions of people in the worldwide has been problem. Inability to cover excessive debt payment can bring down credit scores, and loss of income generally means make a sacrifice that can generally impact someone's everyday life. Now, to cover excessive debt payments, inability to cover the existing debt payments, that loan installment may not be able to service, therefore their credit scores have been coming down. And on the other hand, loss of income generally means they have to sacrifice to greatly their day-to-day life. As the current economic crisis unfolds against the backdrop of a public health emergency, the unprecedented rise in unemployment and disruption in economic activity is putting a strain on the solvency of customers and companies. Okay. The larger number of distressed customers are seeking help for financial hardships across consumer and commercial lending portfolios. Across the consumer and commercial lending portfolio, distressed customers are seeking help to financial hardship arising consumer and lending profiles. Now, according to Central Bank in Sri Lanka, those customers are given what we call moratorium to overcome the situation, distress situation. A larger number of distressed customers are given moratorium. Now, my question is, to what extent this moratorium has helped these customers who are affected by COVID-19 crisis situation? That has to be looked into very carefully. Each and every bank and the financial institutions recheck their figures and see how best they utilize this facility offered by the central bank, and how best the customers are taken up that moratorium to safeguard them from becoming defaulted. We have a job to do that. To prepare such extreme shocks and uncertainty, large hello. පොඩ්ඩක් මම මීටින් එකේ ඉන්නේ. අපි අයික විතර කතා කරන්නේ. Okay, sorry. To prepare such extreme shocks and uncertainty, large US banks have increased their loss provisioning by 3 to 4 times for quarter 1 2020 as compared to quarter 4 2019, based on their expectation of impending default and charge-offs. So the US banks have been increased their provisioning, loan loss provisioning, by 3 to 4 times compared to fourth quarter 2019. This is happening in 2020. So this year they may be able to do some sort of a recovery because this shock and uncertainty reduce up to certain extent. Okay, this management are now new young portfolio, that means new loans, young new loans or new young portfolio, not matured yet. The account management of young portfolio poses additional challenges for bank. The new loans granted is challenging for the bank because they may see an increase in early delinquency and payment deferral requests during the pandemic, and there is not enough performance history in such portfolios to make informed data-driven decisions. Because these are new customers, new borrowers, the informations are not enough to find out the history of the customer's behavior. An increased early delinquency and default are increasing, and their request for payment deferrals, the postponement of installment, this pandemic situation, to take a decision, banks have to have no data at all because they are new. Young portfolios carry the risk of adverse selection, especially with new product launches, new launches. Right? Sometimes these new borrowers start up with this manufacturing production, right? New products to the market. Due to this situation, they may not be able to produce and put into the market such products. Risk managers should creatively use bureau and alternative data sources to address this issue. Yeah. Data enrichment strategy for account management can include use of underutilized attributes like debt to income ratio, total debt, recent inquiries, payment variables, employment types, and so forth. Underutilized attributes. Use of short-term performance like utilization payments and active revolving trade in the past 3 months for early warning triggers. Also, use of debt-related derogatory public records to supplement trade line data. That is published data by the organizations like Central Bank and Chamber of Commerce regarding this debt-related questions. Use of alternative lending payment information and financial payment information from utilities, telecom, property records, and so on, and their traditional data streams. Check with the customers' utility payments, whether they have been making those payments in time. And that will help the banks to find out about information about the customers' ability to service their bank facilities. Okay, so that's all about the monitoring and supervision part. And let's go to the next session. We'll start the okay. Let's start with the warning signs of potential non-perform. What are the warning symptoms? Early warning symptoms appearing in customers' background to identify, to avoid falling in trouble. So, monitoring and supervision has been directed to us to identify good credit, allowed to be as it is, to allow that. If it's a bad credit, then we have to take the relevant precautionary actions. So this early warning symptoms will guide us. What are the good credits? What are the bad credits? And this one we had discussed last week also. Steps involving non-performing advances. Monitoring supervision model we already done. Now what I'm trying to do is identify warning signals, then identify causes of failure, and try to analyze the problem. Once you identify this, what are the options available for recovery? We are selecting recovery options. So next week we can start recovery options. Now today we will find out, see, what are the early warning signals, why the customer fails, and what is the problem. Defining a problem or opportunity is very important. There are 4 stages decided by the management team. Is there a problem? Is there a problem with the customer? We have to fact that. How do I identify this problem? Because customer's behavior or a performance has been certain changes, maybe to the negative side. Any changes to the negative side, so we can anticipate a problem. For example, customer's current account, the checks are bouncing, or customer asks frequent queries. That itself tells us there's a problem behind that. Secondly, what exactly the problem? Now, the definition is that to identify what is exactly the problem. It should not go for general terms. It should not go for general. For example, checks are bouncing. And checks are bouncing. So, what is the reason? What is the exact problem? There's no funds. There's no funds. So, can we satisfy with that answer? We know that. Problem is checks are bouncing. Also, the problem, effect of the problem is that funds are not available, assets are not. Third step we have to identify the problem is how serious the problem is, what depth is called. And now we have to find out why the customers cash flow get deteriorated. Because the cash flow deteriorated, only you could not deposit the cash to meet the check. That's why check was returned. Right? So this is called finding facts to the reason. Why the customer have not got the income to deposit? Now, yes, if you look at if the customer the checks shall be presented for payment, funds are not there. If you look at the date of the check, it is current, but if you can find out the check may have issued long time before, about 1 month back, or more than that something. So now only is presenting for the payment. So now the question arises, now if I issue the check to purchase raw material, question arises now after 1 month, what happened to the selling of raw material? What happened to this? Whether he has misused that or invested somewhere else, or whatever. Why the cash are not there to meet the current check? So that's the depth analysis. Then you can identify the problem, what the problem is, where the problem is. To solve that problem, you take action. So check return is not a problem. It's a symptom. Sales were declining or sales proceeds were misused or sales proceeds were not coming to the account. It's the problem. That's the problem. So identify the problem correctly. If you rectify the problem of the customer, automatically our problem is solved. We have to understand that. If the customer's problem solved, our problem is automatically solved. So we don't have to break our heads to solve our problem of NPA. It is a solving customer's problem. With this mind, with this background, let us go ahead.